Hello guys, welcome to the welcome to the Trading Parrot. 87k guys, this is incredible. Since yesterday we've been looking how the price ignores every single indicator and just goes bananas, taking all this liquidity. Millions and millions liquidated from shorts, which by the way keep adding new positions, making it worse. But since we are approaching an end of the liquidity from liquidation pools, we have to look into our arsenal. What's next? In this video, we're going to look into the short time frame, 4 hour and daily, to try to sniff for hints of where we could be slowing down. But as I've been saying, once we run out of this liquidity, we need to look for other sources of information to stay informed and ahead of any potential pullback and big events that might make a U-turn. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell so you get notified every time I put out one of these videos. This morning, I put out this video called Forget CME Gaps, the Ugly Truth. The video is all about looking at the past performance in October, November in 2020. How many gaps we produced? How many of them were completely ignored once we enter into the most bullish leg of the bull market? Make sure you don't miss that video. It's getting very close to 500 likes and it's full of alpha. Indeed, the video is 27 minutes, but make sure that you look at the timestamps. You go straight into the most interesting topics. When I was recording, I noticed I was already over 50 minutes talking in a row in the morning, and I had to put a stop, and there were some things that I couldn't include in the video that I'm gonna include today in this one, particularly when it comes to gold. There's a bunch of things that we got right, and there's new developments, new things that I found when it comes to the relation between the dollar, gold, and Bitcoin. Do not miss that part of the video. I don't know if you noticed, but on the monthly chart, November candle is getting very close to become a $21,000 candle. In February, we have another 21.6 thousand candle, very similar. And so far, February is still the largest monthly candle that we have produced in this whole bull market. But we are at 11th of November, and if price continue going higher, it could potentially take the throne as the largest month in this bull market. I'm very interested to see what could come next, and particularly because as you can see, by the day, the attention to Bitcoin is skyrocketing. We went from 15, 16, 17, today is showing 60. It's not settled by the way, but it's just going bananas with the price. And I'm not even talking about what happened in 2020. In 2020, by November, we exploded to 30. The price at that point was hitting the previous all-time high, getting close to the 20k by the end of the year. At those points, we were at 35. This is already 60, which means that the attention to Bitcoin is skyrocketing. I promised I was gonna check what's going on with the ETF's spot inflows, but still we don't have a reading. But I'm pretty sure that there must be some very positive inflows. I'll update you on this tomorrow in the morning update. And it's been a very long time I don't see the price escaping from a CME gap, like if it was seeing a ghost or something. But since we opened on Monday, instead of closing the gap of 3.5k, which was the thing that pretty much there was full agreement in my Twitter and Telegram, which made me a little bit concerned after I was asking you guys, because when everybody thinks the same, which in this case was, yes, such a huge gap, we're definitely gonna feel it. And you can see the effect of that. We are 7k away from the gap, and I'm gonna look into a few indicators to see it's still doable that we come back to that and we remain bullish. In this case, the indicator I will use is just a Fibonacci retracement. And if price was to collapse precisely from where we are, which in CME price is 88k, and we came back down into the golden pocket measure from the bottom or the beginning of this impulsive move, the price could come easily to 75.9k, 75, and still fall within the golden pocket, which is the most common area that traders love a pullback to re-enter the market. And I'm not telling you that this is a forecast or anything. I'm just saying that if price falls from 88k to 75k and then it recovers, putting a new high, doing it from the golden pocket is still something bullish. So seeing a breakout somewhere in here makes this move still bullish. And as you can see, just coming in there is still a higher low, and a low that is even higher than the previous high, which is 74k. But in price, Guys, that is a fall of $13,000. And again, not a forecast. I'm just evaluating if we can get away with doing something like that and remain bullish. And the answer is yes. And the second and last indicator I'm gonna use is an anchor VWAP, which, as you can see, if we place it from the beginning of the pump, at the moment is located at 76.7k, very close to that 77k. And what do we know about the VWAP? That the price tends to come back to the VWAP. It's a moving average that is using volume to average down the price action. I'll give you an example. This pump in here, if you put a VWAP, you can see that it took very long, but eventually the price came back into the VWAP. So I guess the conclusion is, for those that think that the CME gap cannot be closed, I still think that it is on the table. And unfortunately, if you watch my video from the morning, based on past performance, the summary is that we may leave this behind. And one, we may never close it. And two, as a second option, we might close it just in the bear market. And just option three, we close it in the rest of the week or maybe in a month time. That is pretty much what we saw in the previous bull market in regards to CME gaps that were formed in November of 2020, which is equivalent to where we are standing right now. Let's go to the 4-hour time frame. This morning, I left you talking about this trend line in here in white. And what did we say? We say that if we enter banana zone and we continue in that state of craziness, the RSI that this morning was located somewhere in here, we say that it could easily put a high relative to the high that we already have and challenge the highest level, which is calculated with percentile nearest rank. A way to do just statistics of the previous values in the past 150 candles in the 4-hour time frame. And I guess you already know that that's where we are. We have broken the statistics, we have put a new high in here, and it seems that we're still pretty far from coming back and even testing once again support on the 4-hour time frame. I think testing support could be in hours or in a couple of days for the 4-hour time frame. We won't stay here for very long. This is a very short time frame. In the video in the morning, I prepare you for what could happen to the price if RSI comes in here and breaks below. We talk about 3 scenarios. Make sure that you watch the video in the morning if you want more detail on that. And the most interesting thing that is currently happening when it comes to different time frames in RSI and price action at the moment is this scenario again that we talk about in the morning. We say that if we break above this resistance from this parallel channel on the RSI daily, that we were setting a target to get to RSI 85. And why is that? Because we placed this trend line coming back from January 2023, hitting October 2023, and again hitting February 2024. And it's been pretty much 1 year after that we're coming back into the same line, this time between 85 and 86 RSI. A very rare kind of setup. I'm not seeing this very frequently. Why do I say it's rare? Because this is an ascending channel. It tends, number one, to break out to the downside. Number two, we have hit this resistance so many times. I was even doubting that we were gonna get to 77, but here we are. We broke 77, and this morning we started already aiming for 85. And we say this morning that 85 is located at 89k. That is it. If we break that 85 RSI, we are basically having a breakout of a trend line that has been holding the tops of the RSIs for 675 days. Almost 2 years of resistance there. But at a level of 85, I wouldn't expect that much higher than that. You can see the RSI daily hitting very high levels. But if you look at the previous bull market, the highest we went was 89. And in this bull run, we did 89 again. But that was in the beginning of the bull market. Getting to 85, given that we have already managed to get to 83, I think is doable. It's just a matter of whether the remaining liquidity at the top of the price remains attractive for the market maker. Certainly the red was an obvious one to take, and all the yellow now is gone. Indeed, it's gone after a couple of hours. We're just left with green, which is 57s, 46, and then with the blue below 40k, 38k, 35k, and then we start going into 26, and that's how we run out of fuel when it comes to liquidity pools. And try to listen what I say. When I say we run out of fuel, I don't mean necessarily price needs to crash because one motivation is gone. Bitcoin can have many motivations to move in any direction. This is about logic, right? Liquidity pools drain. Sure, let's look into what else can push the price higher. But if we don't find much more, then we can start speculating that maybe a pullback is on the way. The last time that we have a channel like this one in here that we are having on the RSI daily was in August 2023 into October 2023. Look at this. You have the stops there. It's not as perfect as the one that we have in here, and the bottoms were also respecting this. And eventually you get to the top here of the channel and you still break out to the upside in an impulsive move into RSI 87. It's good to be aware of what happens right after that. The RSI starts building a channel to the downside eventually, and it continues up until getting into 36. That 36 happens in January, and it recharges the battery for another leg into March. So there you go. This is just past performance, but I'm always up for looking into the past, not to forecast the future, but to have some range of expectations. Going into the open interest, today is a very special day because we were talking about getting into 27 billion in open interest, and today we have reached 28. So we have exceeded the expectations of my target for open interest in terms of what we call open interest discovery. Our speculations in the channel were that we were gonna get in here and we were gonna go just sideways while the price continues trading higher. But we have already broken that level. We're at 28 billion in open interest, and I'm sure that if a couple of months ago when we were at 15, you mentioned to any crypto influencer that we were gonna make it to 28 billion, they will say, sure not, impossible. Once you get to 20, you have to correct and erase it all. No. Interesting development with the spot in here. We have an increase in spot since the bottoming process in here of 31,000. That is how much traders have added into spot for this move up of $20,000. If we compare what happened to spot in this leg into March 2024, that leg was $35,000 to the upside, and spot needed to add up over 110,000 of spot to make the move sustainable without breaking. Remember that if the move is just driven by futures, it just collapses. So we have a move of 20k and we have only placed 30k in spot so far. This move in here is pretty much double this one, so we should be expecting that spot should have increased a lot more. At the very least, it should be roughly half of this. So we are talking about 50k should have been bought in spot to at the very least match all the spot that was bought to fuel this move up, to make it a healthy one with foundations to hold there and not to collapse and to come back to where it came from like we usually do with futures. So yes, it is good, but I don't get that excited with just 31. I want 50 to hold the price and to continue in an uptrend. So yeah, it's a bitter feeling because I love seeing the open interest this high. This means that there is conviction, there's a lot of traders, loads of new people, retail, everybody playing the game. But where are my spot positions holding the pillars of where we're going? Some food for thought. And our friends, the big whales, have started to again mildly distribute. Remember, we have two false alarms in here, one at 20th of October and 4th of November. Both of them pinch quite high, and by the end of the day after, they came back down into 66. Right now it's getting into 95, 0.95, very close to a ratio of 1. If you are not familiar with this, this is an indicator that that's a ratio between deposits and withdrawals coming from large whales, and we want to be on this side to have a ratio that is balanced towards withdrawals, which is an activity that you expect to be seen during accumulation. So we are seeing some early potential distribution, and let's look at the signal itself. The reading, you can see that there is some distribution in here, nothing compared to these peaks that we see there, nothing compared to what we saw in here. Now you can see proportionally we are into the 30Ks, so in my opinion not enough to freak out, but good to be aware. In the morning I cover the weekly time frame. You can see that now we have left the golden pocket and we are slightly sticking our head above the 0618. This is a live candle and it's just Monday, but it's good to be there. It's very bullish. Scalping chart has become useless now. We got some new liquidity at the downside. It's so small, it's impossible to use this to forecast anything serious. And the swing trade is also not very useful. The only thing that matters from this chart is how much is left, and to keep our eyes if we make it to 90k of what happens right after that. You can see that these last liquidations in yellow are causing big liquidations, which we can read from CoinGlass. At 7 p.m. UK time, we have some big liquidations of $15 million. Binance, pretty cool to leave this website on the side and hear the notifications when people get liquidated is crazy. Another thing that I'm noticing is if we calculate this high in here, covering all the fair value gaps that we have in this leg up, this is a move of $34,000 to the upside, a 66% up over 3 months, full of fair value gaps to the downside. The first thing I thought about this is to compare it with the equivalent equivalent one that we have in January, which is also roughly 35,000 move up. And you can see that all the time that we were in the megaphone pattern didn't manage to take all the fair value gaps. There were many that we left pending in here. No one knows if we are gonna close them in the bear market or we'll never manage to close them. Who knows? What is interesting is that this range in here, parabolic, is very similar to this 34K in here, and it's also leaving very similar fair value gaps. It's just an observation, but if we were to start topping somewhere around here or slightly higher, doesn't matter, and we started doing the same move, a collapse like that, which is just speculation, we will take probably everything above the 70K. At the moment, I'm mostly interested in the overlap of the 77 CME gap with levels that we are currently seeing on fair value gaps, and what I showed you before, the anchor VWAP and the Fibonacci levels, all of them highlighting that 77K. And they are just saying one thing: it is doable. They are not saying it must get filled. Make sure that you pay attention to what I'm saying. All I wanted from those indicators and from these indicators is to tell me how likely it is. And I think it's just likely. It's not very likely. It is on the table. It can happen. Don't rule it out. But I wouldn't bet on it. I wouldn't put a short right now targeting 77K. I heard many people that did that after the video. It is your responsibility what you decide doing, but I will never short at this point in time. You will never hear me. I'm gonna short a pump because there is a CME gap below. There has to be some weakness in additional things that make that scenario extremely likely. And the delta once again is spiking. I think last night we have 1.2 million in delta. Tonight we have almost 1.3 million. Once again, huge. This move down in here reduced it quite a lot, but since it's continuing with the pump, new longs have joined the party, which is making it extremely high. And one observation, here we have the 1 month, 6 months, and 1 year, all the liquidations, which we've been salivating for 6-8 months, looking at this cloud and this cloud and this cloud. And I want you to focus on one thing: how you feel now that it's all gone. It's just crazy. At some point I thought that we will never take it, but it's gone. Goodbye. CPR levels is being crazy. Today we broke the second resistance and we are on our way to the third resistance, which is located at 91K. No one knows if we are gonna get there. We don't even know if we are gonna go beyond that. If you're new to CPR, watch my tutorial. Just go to my trading channel, the Trading Parrot, in YouTube, the main page, and hit playlists. Look for trading tutorials playlist. You're gonna find one especially dedicated to the CPR model. You can see that multiple times we break above the top monthly CPR resistance, the top green line. In October 2023 we did it. We didn't do it in November last year. We kind of did it in December, and then in February definitely. In this month actually we went way beyond. We extended the rally into March. Alright, I promised to talk about gold and dollar index in this video. There's something very interesting. First of all, it seems likely, a lot more likely, that we are breaking down on gold. You can see at least RSI has confirmed that with the candle of the previous week. Now we are heading down into the median at 56 RSI weekly. We have the hive in here. We have the candles of the previous performance. My forecast was that the top was going to be on the 14th of October 2024. We are a month late from my forecast. If this ever plays out as a top for gold, I was wrong by a month, and that assuming that this is the top, which might not be. If we look at the top in 2020, here is the interesting part. I have intentionally placed in here Bitcoin and the dollar index in the same chart with gold. And you can see that the week that gold topped out, which is the 3rd of August, it started coming down, it allowed Bitcoin to go higher, okay? And here's the thing that I never noticed before. Dollar, right after gold tops, comes back down, but then it has a rally of 2.7% up, which is 2.5 in value. That small tiny rally kind of lasts for 35 days after gold tops. Once that happens, once that's ended, then we start having this collapse continuing to the downside. So let's summarize. Before the gold tops, dollar is coming down. When gold tops, dollar goes up. And then 35 days after, dollar continues down. If we were to do the same, and once again, assuming that the top of gold, instead of being this day, is this day, then we could see dollar coming down, rally after gold tops. It's not perfect, but let's let's say 35 days after you continue rallying and then you continue down. That is the only option I see that we could make the patterns of gold and dollar kind of make sense for the current environment that we have. We don't need to have the same thing. History doesn't need to repeat, but some elements could play out in a similar fashion. Anyways, I just got very excited to see that after gold was topping in here in the previous time, dollar didn't necessarily just collapse together and make it super obvious for everybody that gold is collapsing, dollar is collapsing as well at the same time. There you go. That's your bull market. No, it wasn't that easy in 2020 either. There were 35 days of dollar still pumping. Guys, if you want to trade in a top-notch exchange, look no further than Bybit. Bybit is a top-notch exchange. I use it to trade with my bots in manual trading. And if you use the link in the description, you can claim up to 30,000 in bonus subject to trading volume and the lowest fees to trade as well. I have a new promotion for the exchange Bluffing, which is a great option if you want to stay away from needing KYC, a VPN to access the exchange. No need for that. Bluffing offers you to create as many accounts as you want. You can use different emails and then keep separated your trades with shorts from your longs, from your trades using altcoins, your DGen account, whatever you want to do. It takes just 5 minutes to fund it and start trading from anywhere in the world. And this new promotion, you can claim 300 bonus deposit just by depositing. For example, you deposit $100, you get 15 automatically. You deposit 500, you get 75. With 1,000, you get 150. And with 2,000, you get 300. Pretty cool promotion that ends on the 22nd of November. Just use the link in the description. Thanks so much for watching. I'll see you in the next one tomorrow.